The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, coming out of the three-day holiday weekend, we saw a very strong trade in soybeans, meal, and wheat futures on Tuesday. Corn was up moderately, and it was a mixed, choppy day in the livestock sector. A lot of headlines out there to take a look at and examine impacting the markets. A lot of chart moves and more we need to pay attention to. Joining us for a conversation, it's always good to have him with us here on Market Talk. Brian Splitt with agmarket.net is back with us. Brian, I haven't talked to you since the new year, so happy new year to you and yours. Thanks for being on the show with us today. How are you, my friend?
Yeah, likewise, Jesse. Happy new year to you. You've got a little baby at home that is seeing a new year for their first time, so that's pretty awesome.
That is very awesome.
Yeah, a lot of basketball this weekend. I tell you what, just between my two boys and two different tournaments, well, actually three. You know, a travel team tournament for one boy, and then it's like Catholic conference tournament for my other son, and then he's on a different travel teams that had a tournament. So I don't know. I was in double-digit basketball games this weekend, which was awesome. I mean, I don't know how I'd rather spend my time in frigid cold than watching my boys play some hoops. But
well, and I'll say this to that point, staying busy, the market's keeping you busy. I'm not quite to travel team basketball yet. I got a few years in front of me, but when I get to that point, I might be asking you for some pointers there, Brian.
Yeah, maybe at the very least, when she starts dunking on the little Tykes hoops, then, you know, send me some footage.
Definitely. We'll see what happens as we get closer to that point. All right, my friend, let's dive into these markets, and just broadly, a real positive day for the producer, I would say, on Tuesday. Soybeans, meal, wheat, sharp gains to the upside. Corn largely a follower, but it just felt like a lot of headlines, a lot of things at play here, but a strong way to start coming out of a 3-day weekend, Brian.
Yeah, right. So really the leaders today, I would say, were the wheat market, the soybean and soybean meal, and corn attempted to go lower a couple times early in the session, and then just with everything else, you know, running away to the upside, it followed suit. But corn has been the leader for a while. It might take the back seat as far as what sees the aggressive strength. And so wheat, for example, commitment of trade data had the funds as of last Tuesday still short, I think it was 88,000 contracts of the soft red, the Chicago variety of wheat. I think it was maybe about 34 or 35,000 contracts of the hard red, the KC wheat. And the Chicago wheat really had this kind of same setup back from about June into August, where it was in this nice downward trending channel. You kept making lower highs and lower lows. And eventually what ended up happening is it kind of broke through the downtrend. It got above the 50-day moving average. It popped a little bit. And then it came back down, retested the 50-day, and then ran up to the 200-day moving average. And so, you know, from about where the 50-day moving average was when it broke out to where the 200-day moving average was, it was about a 55-cent move. And so today the Chicago wheat did the same thing. We got through the downtrend of the channel. We got through the 50-day moving average for the first time in quite some time. And we broke that pattern of lower highs and lower lows. So we took out last week's highs. We also got through the high made right at the end of December. That was a major peak. So this looks like a breakout to me to the upside on wheat. The 200-day moving average is going to be roughly that 55 cents higher. So it's kind of the same distance as what it was back in August when we had that run. And again, it just purely from a standpoint of funds, real time, probably long 350,000 contracts of corn, if I had to guess, right? They were long 292,000 a week ago, and futures have gone up roughly another 15 cents. So I think we're scratching that 350 territory. They're now long the beans, and I don't see the funds going long beans just to go right back to being short. I think they're probably going to build a little bit of a long position there. And so then again, you look at wheat, pretty big short position there. I think that's going to lead to some short covering. And a lot of times that buying that initiates the short covering is some of the strongest buying that you're going to see. Another market I would put in that category would be meal.
Mm-hmm.
The meal in the month of December traded all the way down to the COVID lows, right? So we're talking like lows that were made in spring and then again in August of 2020. And spot meal actually traded below those COVID lows by 3 ticks before then reversing and then finishing higher at the end of the month. And they closed above the November monthly highs on meal in the month of December. So that was a major reversal to the upside in meal. And we also did that in August of 2020, and that led to several months of buying. So these monthly reversals generally are strong bottoming signals. And I think with the fund short meal, you're probably going to continue to see some buying in that market. So I think maybe the corn might start taking a back seat to some of the other markets just because the length there is very mature. We're not record long, but really in the big picture, we're not far from it. So there's a lot more room to buy wheat, to go from short to even just to cover those shorts to get to neutral. There's a lot of room for them to buy meal and go from short there. Again, I don't know if they go long, but even if they just cover the short, there's quite a bit of buying to be done. So we might start to see some of these other markets take over the leadership as far as upside potential from the corn market.
What about soybeans themselves? I know a lot of headlines out there too on Tuesday, obviously with the new administration taking hold. You know, the threat of tariffs is there. No tariffs actually yet, but a lot of talk about that. A lot of talk about trade deals, potentially with China. You look at this South American crop quality concerns that we're hearing more and more about with weather issues in Argentina, for instance, and even into Brazil. So, I mean, you look at the soy complex as a whole. You mentioned funds have flipped their position now. I mean, what's your feeling in soybeans in general? Do we have an upside target potentially here, Brian?
Well, I think there's some shorter term targets and some longer term targets. And it looks like the 200-day moving average is just a moving average we haven't seen in a while. And if you think about how the funds were behaving previously, and this goes back to fall, we had a nice run off of those August lows, and we went up and made some highs in late September, early October, and it was right at the 100-day moving average, right? And then we broke, and then we got a November WASDE report where the USDA lowered yield pretty significantly, and the market rallied from the report right to the 100-day moving average yet again, and then failed. So the difference is that now that we have that January report, which again was a friendly report, it got us through the 100-day moving average, and we spiked through it. And then what we ended up doing late last week is we came back down, retested that moving average from above. We held it and then rallied off of it. So now the 100-day is support instead of resistance. That's a big change that we've seen from the last several months. So 200 days is the next target, and that's going to be up in the mid 1070s if you're thinking March soybeans. So not too far away, actually, maybe another dime higher from where we're trading currently. But when I look at the November chart, it looks like we could be building a really big head and shoulder bottom, right? We had those lows in August, down just above the 1010 area, and then we kind of bounced back up to that 1060-ish zone. Then we went all the way down to 960. We had the dollar break. Then we popped back up here recently up to 57, last week's highs. Then we came back down just above 1010 last week again. So that would be your right shoulder, right? Just above 1010, left shoulder, right shoulder. So if we get through 1060, that suggests we're probably going about 1150, 1160 is the measured objective. That's a dollar away. I don't know why we should do that, but maybe the thing is, everything was bearish, but we all knew it, right? We knew the South American crop was big. And maybe they made it a little bit too big in December, because I think some of the privates were talking, this crop could be 175, 176, 77. And now we're talking, like you had mentioned, some quality issues, specifically central Brazil. What was making the crops look like it was getting bigger, which was the rain, is now making it look like it's, the beans are sitting in the field and they're wet and the quality's bad. And is that going to affect yield? And now we're talking some harvest delays. And does that push back the safrinha corn planting? So, we had a little bit too much of a good thing, I think. And would it be crazy if the Brazil soybean crop did what our crop did, right? Where we had some late conditions late in the growing season that took the top end yield off. And, we see where corn is right now. And with the funds deciding to go long beans? Is that kind of what they're sniffing out? Is that reversal in meal, the monthly reversal in meal, helping that bull case big picture? But I've been hearing that China is potentially putting some restrictions on Brazil beans. That some of the recent buying is buying so that they can have high quality U.S. beans to blend with some of the lower quality South American soybeans. Because of the quality issues, any beans that China wants to buy for reserves that they're going to store needs to be U.S. soybeans. So even though we're more expensive, maybe it's a little bit of a quality type of a deal that's going to lead to some kind of short-term continued buying of U.S. beans on the export front.
We are talking with Brian Splitt from agmarket.net here today on Market Talk. Brian, you mentioned corn maybe taking a back seat here to some of the other commodities. I wonder, $5 futures, we look at some of these contracts getting up to that level here on Tuesday, 501 July actually on the close, 499 and 3/4 in May. You look at some of these old crop contracts, is $5, is that a more of a psychological hurdle to get through? Is it a chart hurdle to get through? What are your thoughts there?
Yes.
Okay.
So, it's definitely a psychological number. $5. We haven't seen a $5, on old crop corn in a long time. So I do think you're definitely going to have some producers that look at the July and look at the May, and whether we have the $5 handle or very close to it in the May. That's going to garner some attention. However, from a chart standpoint, it is also a level. So if you look at the July contract, for example, this goes back to January of a year ago, $5 was like the level, right? That was a shelf. And then we had some highs in March, 502.5 early March. Then we backed off. Then we revisited $5 on the March report, backed off. And then we did get through $5 in the month of May. It was right at the beginning of May. And when we got through it, we went to the May high, which was the spring high at 520. And then that made the highs. Then we pulled back. We went straight through $5. Then we tested $5 one last time in mid-June. And then that led to that big break from mid-June all the way into July, and then in August when we made the lows. So there is definitely chart resistance at $5. And I would say that the zone between 5 and 520 is going to be really, that is the 20-cent zone at the upper end of the trade, going back to the spring highs. Above 520, now we're talking a very major possible breakout. We haven't done that yet, and I don't know if we do. But I think if I'm, looking at, hey, should I be selling some old crop here with a 5 in front of it? And I want to still have some participation in case the stuff continues to get wacky here as we go into our own summer time frame. Maybe the strike price of 520 is a strike price to really hone in on, because, again, that's the spring high. And if we start pushing the spring highs and we want to see what's on the other side of that, then we could go materially higher. But I don't know. I know the funds are probably 70 to 80,000 contracts off of a record long position. And I think if we go to 520 July, they're going to be revisiting that record length. And it's going to be very hard for me to justify, having a long position in general, whether it's in the cash market or on the board, with funds at record length. We've seen that story before. We know how it ends. So I really do think this is a very good opportunity for producers. New crop corn, 460 is a shelf, right? We traded in July, right? So this is July 24. Second day of the month, 461.25. 25th day of the month, 461.25. The high in October was 59.75. Last week's high was 59.75. So 460 is a very big shelf. If we get through that, maybe we're talking 480 to 490, but it hasn't broke out yet. So it's going to be interesting to see if this new crop gets dragged higher by the old crop, or if we're still going to have the idea that big acres are going to keep a little bit of a lid on it for now.
Let's talk livestock trade before we close it out today. It felt kind of choppy in cattle and hogs on Tuesday, specifically in cattle though, Brian. I know we've been watching this futures trade on the fat side getting close to 200 again, and wondering if we'll break through that. I know cash is above it. It just seems like that is such a critical area right now for cattle futures. Talk about that for us a little bit.
It is. When you think about the live cattle and on a continuous chart, always showing the front month and kind of how things line up, there's kind of an overhead channel line in that 202, 203 area. It does go up a little bit month to month because it does trend higher. So we're going to have that as a little bit of resistance, but it's just interesting. I don't know, what tops the cattle market. This is the uptrend that we're in is now working on 5 years old. So it's been a very, very strong uptrend. But at some point, what is likely to happen is the cash will be trading at a price that the funds just don't take the futures to. And when you see them start to diverge and then they start pushing the futures down, even though cash is above 200, that might be how the market tops, at least in a short-term basis. And I'm not saying that's what we're doing right now, but that's probably how the rug gets pulled is, you see cash trade above 200 and it seems like, oh, well, I should buy the futures then because they're not there yet. But, if the futures can't break through 200, then maybe that says something. I look at the April contract and I think back to April of 2023 or the April of 23 contract, and it was back in September of 23, but we were testing 200. I think we got to like 199.80 or 82.5 or something like that. And then we had a hellacious break off of that level. We just couldn't get through 200. So now April recently has gotten up to what, like 199.70, very close to that high. It's going to be a very tough nut to crack. If we can get through 200, then maybe we're reaching a new level and maybe cash will make another jump if it does. But I think this is just a market where with the funds, as long as they are, at the very least, have some puts, right? Have some puts, at what the low is for the year. It is in that 195 area. Maybe you'll put it 194, 195, and just buy it outright. Because we have seen some major corrections where when cattle break and they want to break $20 to $30, a put that you spend $3 or $4 on can be a lifesaver, right? And still have the upside open.
Very true. Feeders have been impressive as well. And then hogs kind of lower on Tuesday, choppy. It feels like lately, trying to find some fundamental footing. I think. Any thoughts in feeders or the hog trade, Brian?
So feeders, cash has been very strong, and the January contract was really the bright spot today. But then as you go further out, there was some selling out there. What I can tell you again on feeders is, again, you're looking at the fund length there, and it's record length. Again, that doesn't mean it has to go down today, but at some point that record length is going to get vulnerable, and it will turn into selling. The thing about hogs that bugs me is, we're coming off of some record length. We did have record length towards the end of 2024 in hogs, and the structure of the market is not advantageous for the fund to roll a long position. So if you think about, where the February contract is, and what do we settle at today? A little north of 81. But then you look at summer months that have been, meandering or in the 100s, right? So does a fund manager want to get out of some short-term length that's, down in the 80s and then say, well, I'm going to buy, deferred contracts up at 100. They like to do that type of role in more of a market that's structured like cattle, right? Where they can sell the front. And then if they do want to go out and buy some of the deferred contracts, at least they're trading at a discount to the front, right? So I can exit my Feb and my April and then go out and buy some of my summer months at a cheaper value. That's much more conducive to the funds rolling a long position.
We always enjoy the knowledge and the perspective, Brian. And I'll give a plug real quick. I know your Farming for Profit Not Price conference coming up February 2nd and 3rd in Nashville, Tennessee. I'm looking forward to being there and seeing you in a couple of weeks. And I know folks can get more info about that and other details on the website, can't they, Brian?
Yeah, if you're looking for a last minute, hey, I'm cold and I want to get out of Dodge, then not that Nashville is going to be warm like Florida, but it's going to be warmer than what we're dealing with, and maybe learn a little bit about the market. But yeah, go on www.agmarket.net. There's a banner right at the top. You can click on the banner. It'll give you the full itinerary, all the speakers. The reduced room rate, unfortunately, that block, the reduced rate was up on the 18th. So you're going to have to pay full price for a hotel, but I think if you're looking for somewhere to go, get out of town for a little bit, we've got a good lineup of speakers, and we'd love to have you still.
Absolutely. Agmarket.net for more. Brian Splitt, always good to hear from you, my friend. We'll see you in a couple of weeks at your conference in Nashville.
Yeah, I can't wait. See you there, Jesse. Appreciate it.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.